Hey everybody, this is Jim at SP500chart.com. It is Sunday afternoon about 3 o'clock on February 17th, 2013, and we're going to take a look at the chart as of the end of the week ending February 15th. And we're going to take a look at what happened on that day, the 15th, and what took place during the week. But as always, before we do that, I need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research, and you need to make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I am just a guy who draws lines on charts. Okay, we're starting out looking at a 30-minute chart, and you can see that since January 2nd, which was the first day of trading in 2013, the S&P has been defined very clearly, now that we have a little bit more retrospect, even more clearly than it was a week or so ago, has been defined as trading between this support line and this resistance line. Now you'll look at this and you'll say, well, you know, the support line looks pretty solid. That resistance line doesn't look to be super reliable. Well, and if you said that, you would be absolutely correct. And it's kind of a tendency of channels that in a bull trend, the support line tends to be more reliable than the resistance line. In a bear market, the resistance line tends to be more clearly defined than the support line. So since we're going up, this is a bullish trend, and we're getting support that is more lined up, if you will. You'll remember early on I had this line drawn differently because it looked as if this was what we were actually dealing with right here. And if that were the case, then we actually would have had a rising wedge. And you know, I'm not discounting the effect of this line, because in fact we may see this in retrospect as a rising wedge that broke down and now has undergone a series of back tests. It's interesting to note, maybe just coincidence, but our apex of that wedge is at about 1529, and that is also where our target is from this triangle pattern that took about 2 weeks to develop, and that is enclosed by these four blue lines. So that's kind of what's taken place so far in 2013. Now here's what gives me a little bit of concern as at this point in time, a watchful bull. I'm not a bear yet. I am a watchful bull. And the concern is that we have had numerous bounces now, or tests, maybe is a better word, on our support line without a run up to resistance. Let's take a little bit closer look. Here you go. 1, 2, 3 tags down on this support line while failing to reach all the way up to our red resistance line. So that, you know, kind of makes me wonder why this market is unable to reach that line, and that I take as a sign of weakness. But we're still above this line. So while there's a hint of weakness, I don't really see the direct proof of weakness. Now, there's another line, a couple lines actually, that have been on this chart. This line is new. This appears to be a horizontal or nearly horizontal support line that is at roughly 15.14 and small change. I think that's kind of interesting because we've had 3 attempts at this line and it's held. So you might say, well, Jim, that would be a little bullish. Well, maybe, but you can see what I'm kind of looking at here. I'm looking at the possibility if we come down to this line again on Monday or Tuesday, either the 19th or the 20th, and break through this line, then this will have become a little double-headed small inverted head and shoulders pattern, and our triangle will have failed to meet its target. But I'm not quite ready to throw this in yet. Until we show signs of a break of trend, I think we still have to keep this 1530 and a half, roughly 15, let's call it 1530. Keep that target in mind because that is what is pointed to from this entire 2 weeks of trading. So if we look at last week in terms of a weekly review, we see really a week in which we maintained the breakout status that took place on Friday the 8th. We stayed over this top line, which lends more and more credence to the idea that we make this 1530 target, which is measured as the height of this diamond pattern. Now, I remind you, diamonds can be reversals or they can be continuations. I have a tendency to think they are a little bit more indicative of weakness than well, let's put it this way. They're sort of a neutral-ish pattern, but they often will form at tops, but they're not confirmed until they break. So since we did not break this blue line, but rather broke this blue line, we have to call this a continuation pattern, and we measure the target, and we get 1530. Maybe even 1531, thereabouts. So this entire week, we stayed above that line. The entire week, we stayed above the lower support line in our channel, and on Friday, we bounced late in the day. Is this bounce going to carry through? Well, right now there's no way honestly to tell you, yes, this bounce will carry through. It looks like it was a pretty decent little move coming off of about 1514 and putting on a quick near 5 points within the last, how long? Within roughly the last hour and 20 minutes of trading on Friday. So let's see, maybe we get a little carry through on Monday. If so, I would love to see this 1530 get met. Personally, I would really like to see that. And that can happen now without reaching this red line. So we just need to keep 1530, 1531 in mind as a target from this triangle, but at the same time, because there has been a little sign of weakness as evidenced by the 3 tags on resistance without a tag on, 3 tags on support without a tag on resistance, that tells me there's starting to be a ceiling here, or at least it's taking more and more time for the S&P to make a rally, whereas before there were a lot of buyers lined up ready to push it on up in a hurry. Now it's starting to look a little bit more sluggish, like there's a little bit more headwinds. So coming into the week that will start tomorrow, trading on the 18th. Excuse me, I take it back. We do not trade tomorrow because it is a holiday. Forgive me for that. Our trading takes place, so we start on Tuesday. So, just the same. We do the same thing, we just call it a different day. On Tuesday, we look to see if this red line holds, if this bounce continues, and here's what's really interesting. We still got this brown line in our chart, and that, folks, is a pretty long standing line. If we look back on the 2-day chart, we see 1, 2, 3, now 4 tags on that line with momentary piercing of that resistance line back in the first half of 2011. If we go back to 3 days, well, actually, that doesn't help us that much. 2 days does show us all of the touches on this line. I don't know why I extended it all the way back. Tell you what, to keep me from making that mistake in the future, let's just do that. When I see a line go off to the left of the chart, I automatically, out of curiosity, want to see what happens over here on the left side. But nothing happened of any importance. But you can see this line right here, clear tags here getting above it. These red arrows, I will remind new subscribers, you want to know what that is? That's the 1st of May. You know what they say, sell in May and go away. I'm not a real believer in sayings. Just because something rhymes does not make it so. I should have made that rhyme. Just because it rhymes doesn't mean it happens all the times. So just because something sounds cute does not make it true, but you can see that at least on the last 3 Mays, it would have been pretty good advice. Pick the high in 2010. It picked the high in 2011. It failed to pick the high in 2012, but didn't miss it by much. Let's see what happens in 2013. So there's our weekly review, and take a look at what happened on the 15th of February. I want to thank you for, if you're a subscriber, for your support. If you're not a subscriber, I just ask you to consider it. Help me keep doing this. All it takes is signing up at sp500chart.com and a willingness to essentially buy me half of a cheap cup of coffee per day. It's $19.95 a month, and you'll get a video after virtually every day's close. There's going to be an occasional time when I can't meet that objective, but I think it's only maybe so far 2 or 3 times per year that I do not have a video ready after each day's market closing bell or shortly thereafter. So guys, thanks for your support. Take care. Let's see what this shortened week coming up brings us. Thanks again.